What's good, y'all? Hope everybody's having a great day. Today, I'm going to be going over my profitable strategy or the strategy that I use to become profitable. I'm going to be going over some tips that can also help you guys along your trading journey because I know um, whether it's psychology or overall like your impulsiveness over trading stuff like that, I will be going over that today as well. So first, I'm gonna give you guys a quick overview of the strategy I trade. So I trade using trend lines, right? I trade using trend lines, basically market structure. It's not really just trend lines because in some cases I don't use trend lines, but I trade with market structure, right? So if the market structure shifts, I take price down, right? Or wherever, if price goes up and shifts, I take price down. Price goes down and it shifts, I take price up, right? I usually take price in the opposite direction that it was already going, right? So today I ended up taking crude oil, and the buy I took on not crude oil, platinum. I ended up taking platinum. I do trade futures as well. I do not trade forex anymore. I made the full switch just because of broker issues, the tax benefits, just overall. Um, um, Futures to me is overall just a better switch. Also, I do recommend it. Majority of my students has switched to futures as well. I recommend that if you are starting out trading and you do not trade forex already, I recommend trying out futures, giving it a look at, checking out Top Step as well because um, that's a pretty good platform for anybody that does want to get into futures or already trades futures, right? Um, so the trade I took was this trend line right here. Price broke this level 123, and I missed the entry on the breaking point here. So I ended up getting in late, and I ended up getting in right around here, right? It was the 5 minute engulfing candle, bullish engulfing right here. So price went down, boom, boom, bullish engulfing, and I ended up entering right around here, and then taking price to the upside, right? So my entry was right around here, stop loss is right around here, and my take profit was like right around here to the top. It was like a 1 to 2.3. I was risking like 5 to 7%. For me on my live account, I risk 5 to 10% per trade. Um, just because of my risk management, how consistent my win rate is, stuff like that. So I'm able to just have that overall um ability to use that much percent per trade. But I recommend if you're trading on Top Step or you're trading just futures in general, but in this case we're going to be talking about Top Step, or I'm talking about Top Step because that's majority of people don't have a live account yet. I recommend trading 0.5% per trade or 1% per trade, right? Because that goes along with the rules. 0.5% per trade is best because the the rule for Top Step would be um, you have to make 6% to pass, but you cannot lose 4% overall, and then you cannot lose 2% in a day. So if you lose 2% in a day, it stops you out, right? And you can't trade for the rest of the day until the next day. Now, if that next day you lose another 2%, then then you blow your account and now you have to restart into a new phase. The accounts are like $20 a month. I think right now, like with TopStep X's new platform, you could trade on TradingView. The TopStep X platform is pretty simple, and I can actually go over it right now with you guys because I actually have an account that I'm trading with my live trading group. So I'm gonna go over this real quick. Top Step X. Boom. Okay. So I have 3 accounts connected. Right. This account is passed. This account is in $400 profit. But yeah, how this platform is pretty simple. Um, it's basically like the TradingView charts. It's a TradingView integration. Then you can also set your daily limits, your daily stop out. So on this account right here, on this 50K account, I manually stop out at $1,400 profit, because you can't make over $1,400 or $1,500 on um on a challenge account, right? So all right, so here's the live account, right? Right now it's in $400 profit. It was like a 1 to 2 $400 profit. I accidentally placed like I left a trade, a winning trade running. It came down, hit stop loss, and then today I brought it back with this $900 trade. I'm used to trading a whole bunch of accounts, so I trade my live account and then I trade these top step accounts. But I'm just passing these for someone. So um, yeah, but you go to the settings bar, you can set your daily risk, so you can risk 250, and then boom, so once you place a trade, your stop loss will automatically be at $250, your take profit will automatically be at 1,000, right? Daily loss limit, personal daily risk. So if you lose $750, you can set this to how much ever you want. It stops you out, it liquidates. You can do liquidating block, liquidate, or do nothing. Liquidating block is basically if you place a trade and it goes down, let's say you don't place a stop loss and it goes down to $750 profit or negative, then you basically can't trade for the rest of the day until the next day. It blocks it out. So you can see how right here it says account boom boom boom. You see how it's manually locked. I did manually close this one out, but this one hit the daily profit goal right here. This one hit the daily profit goal, and I copy trade these, but I have the copy trade off right now. But hit the daily profit goal right here, 1,386. I was risking one contract. I think it was platinum buy, and I entered a little bit early, so that's why I was able to actually enter 2 contracts actually, and this hit profit right there. It was risking like $400, I'm pretty sure, and I hit like a 1 to 4. That might have been like a 1 to 4, 1 to 3, around there, a little bit, 1 to 3.5. And yeah, that's how you set up that. You can set up copy trading through there. I have copy trading off right now, but you can set up copy trading through there. Recommend data fast if you have decent internet. You can set up all those other things as well. All right, so to get back into the strategy, right? I'm on the line chart because you guys can use the line chart to definitely help you guys with your charting your levels or just support a resistance, right? So we're gonna go back to normal candlesticks. So you see right there, I marked on the line chart, and that's because I have a rejection right there. I have a rejection right here, right? Price fails to break under that level, and then price I have a rejection right here before boom retest down. So when price comes back up, I'm going to take the sell off this level, looking for price to go down, right? Because we initially broke a level and we shifted into market sells, right? That's why the market dropped, right? Because we went up, we were buying, we hit highs, and we started making our way down. Boom, boom, boom. You can see the M pattern forming. Now this is a higher time frame M. So if we go to the higher time frames, right, go like to like the 1 hour, you can see where the market shifted here. We went up, we went down, we went up, we went down, and we broke resistance, and then we dropped the market completely dropped. Today, the buy, boom, right, boom, 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 W pattern as well. Right here, we shifted, and now we take our make our way up. Now we didn't retest the area I wanted to retest. That's why I ended up getting it over here, and still taking it to TP. But you know, we're actually probably still gonna make our way up because we're still on an uptrend. Overall uptrend, we did create this W pattern, which means that the overall market should shift. If we shift above this level, we should make our way to the upside, right? Hopefully, I want to see us consolidate today for the rest of the day, until tomorrow morning, so then I can possibly catch this breakout, tomorrow, right? I'm gonna be uploading this video the day I'm recording this video on the 21st. I'm gonna be uploading this video on the 21st, right? We'll go down to the 5-minute now to go back. So that trade would be entered here. I would enter this trade here, stop loss there, and then take profit down. Right now, me personally, sometimes my RR is a little bit different now. So sometimes I will go, depending on how much I'm risking, sometimes I will go for like a 1 to 4. Sometimes I'll go for a 1 to 5. Sometimes I'll trail for a little bit more. I don't usually go for 1 to 2s unless I don't think price is going to go up. Just like this case right here, we hit a resistance and I did not think price was initially going to break past this level. So I closed at the top here, right? But some of my students caught the same trade as well without even me saying anything about the trade, which I like to see because that means that everyone or people are understanding the strategy. Someone hit me up the other day, like they watched my YouTube video and they're doing good off the strategy. So I love to see that as well, right? Um, this you can mark a trend line here, but I personally wouldn't. I would just look at this as a level. So you can also use the line chart for this as well. You have a resistance. This is not really a good line chart to use, but you can see the W form here. So you can see down, up, and we broke above that resistance. We retest and we make our way to the upside. Now, in this case, it's not going to be perfect because the line chart doesn't really look as good in this case. So we'll go down to the 5 minute and use the 5 minute line chart. And I think this is it, right? Yep, this is how it is. So you can see the rejection here, boom, the rejection here, boom, boom, and the rejection here. So I personally, right, and it also lines up with the indicator. Now the indicator isn't out yet. This is my personal indicator. It's pretty good. It gives some good buy and sell signals. It will only pop up one sell signal and one buy signal per New York session, right? And per pair. So you can kind of align this with the strategy, right? If you take a trend line and you're waiting for the breaking level, you wait for the indicator buy, the indicator gives a buy and we'll go down. We'll see that the indicator give a buy here, take price, boom, to the upside, right? Now you can also go off of the indicator stop loss. It's not really a stop loss, it's just a level that price needs to break in order for the indicator to give you the sell. But in this case, you could have just went off your own stop loss level, right? But yeah, this is the levels: 1 rejection, 2 rejection, 3 rejection, 4, and then you take the breakout and then the upwards move. Wherever you enter your stop losses, I recommend having your stop loss under a point of support or resistance, right? So having it right here would be pretty good as well because boom, price shouldn't retest further down, but it depends on how good the setup looks, right? Now, if you have the EMAs, the tighter the EMA is, the better, right? So if the EMA, if price is going on a trend downwards and the EMAs are pretty tight like this one, and you see a shift, that most likely means that price is going to have a decent move to the upside just because of the, how do I say this? The explosion, right? The explosion of price, basically. Um, Price starts consolidating, boom, you get your setup, level break, boom, one direction, right? In this case, the EMAs got really close, were really close before the break. Well, when the break happened, break retest, downwards move. In this case, the EMAs were not too close together. It still gave a move, but that's kind of how sometimes I can really tell if price will have a big move or not. If the indicators are not super close and they're super spread apart before the break, right? In this case, the EMAs were pretty far apart when the break initially happened, so I didn't really expect a crazy move of price, right? Overall, today was not that good of a day on all these other pairs. Um, NG had a pretty good trade, so boom, right, breaking under level, shift under that resistance right there. Could have taken the sell right around there to the downside, right? RB, um, which is gasoline for anybody who doesn't know. These are all futures pairs. Now for Forex, the strategy works decently in Forex. I personally stopped trading Forex a minute ago, right? I never really traded Forex pairs that much anymore. I was just trading indices, but now I just trade futures. I still trade indices because YM is indices. YM is US 30, NQ is NAS, right? So I just went over the trend line break and stuff like that. So now I'm going to be going over how to mark levels, right? Let me clear this chart real quick. So how you initially can mark out good and decent levels is you can go to the hourly, right? And in this case, price is pretty choppy, but Let me turn this off real quick. Price is pretty choppy, but you can still mark out pretty good levels. And that means that when price is this choppy, you don't want to go based off of this. Because if you're marking levels like right in between here while price is consolidating, then I just don't know, because there's no resistance here. Like there's no area to go off of. You're waiting for the move off of areas like this, right? You see where price turns to from support to resistance. So, like I said, line chart. Look, 1, 2, 3, 4, up move. Then you expect price to come back down and make a rejection, right? Because this is initially a demand zone, right? Vice versa, if it was a if you're looking for a sell, it would be a supply zone, right? Um, we'll go down. Looks the same. You can see that there. Boom, boom, boom. On the 5-minute time frame, right? So you can use these on Heikinashi as well, because Heikinashi gets rid of a lot of like fake out candles. A lot Heikinashi is a lot smoother. You don't have to use it to trade, but you can use it to mark up your chart, right? Um, so now you go down. US 30, if you don't see any levels on US 30 on the hourly, just go down in the time frame because you see more data, right? Okay, now I see consistent rejections off of here, right? From here, we have a rejection off here. We have a rejection off here. We have a rejection off here. We broke, we came back up, and we rejected again, which means that we mark this out. That means that if price comes down, we can possibly have a rejection here. And then you just mark out the high. Right, boom. You mark out the high because that's there. Then you go back down to the 5-minute, or go back to regular candles, and now you see the levels that you have. So now you have here, here, and here, right? I would personally mark out this level as well. You wouldn't see this on Heikinashi, but I would mark out this level as well, just because we had a high point, right? We had a high point here, and then we came over here. We had our rejection right off this level, and so price can possibly come down and reject off these levels. Now, I would recommend making the levels that you want to buy off of green. So if you see these, mark these green. Like I recommend color coding, because then you know what you're looking for at those levels every time, right? So green is for me, green is for buys, red is for sells, right? So in this case, I would make this green, right? This should all be green. So if price comes down, I know that I'm looking for buys within these areas, right? And then the red levels, the top would be sells, right? Yeah, so we're gonna do this on the hourly. So on crude oil, let me delete this, right? We got a high, so we have a high that's being projected multiple times. This would be in red because I see that price is rejecting this 1, 2, 3, 4 times, right? Now we have lows. This would be in green, right? Because I see price rejected this level 2 times, right? So now I'll make this green real quick. Right, so now we have our red and green zone, right? Now, why did I not mark anything crazy in the middle? Because there's not really anything that's being respected overall. Price is breaking every single level, boom, 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 right? But you know what I do see? All right, let's go down to the 5-minute, right? I see a level here, right? Boom. See a level here. Because we have 1 rejection, 2 rejection, 3 rejection. Now, even though we broke this level, we still came down and respected it, right? So it's still, to me, still counts as a level. We did have a retest here, and it did look like, okay, we broke through it, so now this level is not valid. But it doesn't matter because we still came down and respect it. If we still come down and respect the level, that means that we still can take that level, right? Now, how do you take a buy off this scenario, right? Well, pretty simple. Look at how price formed resistance right here. You see how price came down, came up, and then dropped again, right? Well, it dropped again, rejected off this level. So I will mark an interior level right here, and I'll mark these in blue, right? So now you have a blue level there, right? You can see how price came down, rejected, came down, rejected again. Now we know we're at a major level, right? What do we do at the major level? Do you buy or you sell? Because if you buy, you might make a mistake, because if you just take a buy here, you might buy and then price will come down, boom, 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 and then make its way down, because sometimes price goes from level to level, right? What do you do here? All right. So in this case, we dropped, right? We rejected, we went down. Now, where do you look for buys? Where you're looking for buys at a level break. And if you have a major resistance level right here, and you don't know if you want to take a buy or sell, you wait for an interior level break, which is here. Because not only do you have 1, 2 rejections there, right? You have a level that you could shift off of, which is here. Because initially, if you come down, if you would come down like this, right? If you come down and shift back up, you just broke back above all the resistance that you just created. Because it's only 2 taps, but those 2 taps are pretty important. Because you see how price came back down, respected it, and made its way up, then came back down to reject, and then went back up. So in this case, right, this is around 8 a.m., right? This is around 8 a.m. So look, this is what I say, trend line, right? Now, like I say, you can mark a trend line or you cannot. If the trend line looks too steep to you and you don't want to mark that as a trend line, you don't have to. But like I said, you look at the levels. So in this case, I would look to this as could be a possible trend line, right? Now look at the level. The level is here. You can do this without the EMAs, right? But you could use the EMAs to add confluence to your trade, but you don't need it, right? So there's a break right here. Boom. So trend line, there's a break right here, bullish engulfing candle. That's showing you that there's buying pressure. The buying pressure is now stepping into the market. The seller, you see how it had a bearish engulfing candle to break here, and now it has a bullish engulfing candle to break here. Guess what it did? A retest downwards move. So you know what it's going to do? Retest upwards move. So this is where you take that buy. This is where you take that buy because of that level being broken. And now you know that you're at a strong resistance at the bottom. So now you know, okay, you're at a resistance at the bottom, right? You just broke a trend line. You broke a level. You're rejecting off of a level. That's multiple confluences combined. Where's your stop loss? You could do the swing low. You can do right here, right? Now, if I turn the indicator back on, I want to see if this did print. Okay, look, right? Look how that lines up perfectly. Now the EMAs are up here, but we're going to disregard the EMAs in a second. I would disregard it because we're at lows, and if we're far deep down into the market, the EMAs aren't just going to teleport down here. They're going to still be up here, right? You see how that perfectly lines up with the indicator? And I didn't even see the indicator. So now boom, 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 buys, pullbacks, upwards move. And that's how it just lines up, right? And that was today, right? Today's the 24th. Wait, no, today's not the 24th. 21st, yeah, I'm tripping. Today's 21st. So this was today. And yeah, that's basically just how you aim for levels, and that's how you would use the indicator. When the indicator does release, it is going to be a subscription based indicator, but when the indicator does release, then you know, you guys would be able to have access to basically the trades, the breakouts. But there's also going to be a strategy that comes with the indicator breakout, so I'll also explain I'll explain the strategy within the indicator video. But yeah, trend line break, boom, 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 market structure shift. You see the shift there, and that's all you really need, right? You can do this consistently. It won't work every day because sometimes the market is trash, but once you aim for those A pluses, bro, it's gonna work a lot of the time. Like in this case, there's a trend line down. You can wait for the EMA shift, but there's also earlier shifts before that where you can get in early. Now you see the resistance level. We have 1, 2, 3, 4, 5, 6 rejections, right? So when price breaks this level, what do? You take a buy. Now in this case, the indicator didn't pop up until here, and looking for the break of this level, lining up with the lining up with the EMAs, right, and lining up with the level break, because you would initially wait for that level right there to be broken. But what happens? Boom, goes down, goes up, goes down, goes up, giving you the retest right here. This is the market structure shift you want to see. Multiple rejections into a shift, into a retest, into an upwards move, right? And that's how you initially take price, boom, to the upside, going to hit the top resistance for take profit, or because remember, we marked the levels out. So you're already looking, just yes, you wouldn't see this, but we already have the levels, we already have the highs. There's no reason to be trying to predict the market going 1,000 pips to the upside when you have no reason for the, like, you have no confluence to do that. Just because your trade is, don't get greedy. Just because your trade is going good doesn't mean it's going to go all the way up, right? You find a resistance level, take profit, done, call yourself, call it for the day. You're done for the day, and then you're on to the next day, right? All right, so let's get in a little bit about psychology, right? I highly recommend anyone that is trading to write down your trades. Whether you have an online trading journal, whether you have a trading book that you write in, please write down your trades. This will inevitably help you with your over trading. The reason why this will help you with your over trading so much is just for the simple fact is you have to physically, you not physically, you have to think about the trades that you are about to take. Like, you have to think about the trades so you can write them down. So if you're writing down your trades and you see a whole bunch of bullshit, like, you can't explain to yourself why you just took that trade, then there's, like, when you think about it, there's no reason for you to have taken that trade, right? Because you can't explain to yourself why you took that trade. So that was just a bad trade on your end, right? Now, with losses, right? With losses, if you're writing down your trades and everything that, like, you make a checklist or whatever, everything you want to see, boom, boom, boom. If you lose the trade and you see everything on your checklist checked off, you still won. And I want you guys to take that into consideration. You still won the trade no matter what. And the reason why I say that is because even though you might have lost the trade, you still won overall because you followed your plan. Right? Following your plan is the most important thing to do in trading, is because if you're taking a whole bunch of setups and not following your resistance plan that you not resistance plan, but your risk management plan that you set for yourself, is going to be a lot harder to see that profitability overall, right? Because you set these goals for yourself and you set these things for yourself, and yet you still didn't follow them. So it's like, what was the point of even doing that if you weren't going to follow them? But then if you follow them and you lose, I mean, you're gonna lose here and there. Like, I don't win 100% of my trades. Like, the month of January to like February, I had no losses for like a couple months, but then the market started getting a little bit and then I ended up switching to future, so then I started making the jump as well. But I was still had like over a 70-80% win rate around there. So it's like, but I was taking A plus setups, and then the ones that I would lose wouldn't be A plus, right? It would be like A's. I still fall under not taking A plus setups because I still have my intuition. I still think like, okay, sometimes I'll be like, okay, here, boom, boom, boom. But if it's not an A plus setup, then I won't risk as much, right? And that's where my risk management comes in. If it's not an A plus setup, and I think like, okay, there's a possibility of this trade going up, and it still looks like a good trade, but this is not an A plus setup, so I'm not going to risk 5 or up to 10% on this trade. I'm going to risk like 2.5% of this trade, because that's how I risk. I usually try to flip my account once a week, my live account once a week, because I aim for, if I'm aiming for like a 1 to 4 and I risk like 5%, then I make 20% for the day. So that's kind of how I go around my risk management, because I can kind of go for, because if I didn't have a higher win rate, then I wouldn't be risking as much. But since my win rate is high, as well as I understand how to read market structure pretty well, I just risk more. But in the cases, I recommend everyone to risk, like I said before, 0.5 to 1% per trade, right? This is going to help you overall with risk management, because you're not going to be so worried about blowing your account, or maybe worried about a loss when the loss wouldn't be that big, right? All right, but back on to what I was saying about psychology, right? Um, Writing down your trades is very important, right? Also, understanding that losses will always happen and not having an attachment to losses, because I recommend, if anybody's out there trading funded accounts, bro, that money is not yours, bro. Realistically, that money is not yours until you make that withdrawal. So, all your attachments to that money should not be there, right? And I know it's hard. It's easier to say than just be done. Like, you can't just be like, oh yeah, now I'm just gonna randomly switch off all my attachments just because somebody says so. It's not that easy, but you have to build that. And how you build that over time is with experience. And that's why when people say they're gonna take a break from trading, I always think about it like, okay, why are you taking a break and what is it for? If you're taking a break because you don't want to lose money, then I could understand that, but there's also a thing with that, because if you come back to trading, then it's like, what was the point of even taking a break, right? Because you took a break to initially not lose money, but then you came back, and then what if you come back again to lose money? Just because you leave doesn't mean your psychology's all of a sudden gonna come back and flip and be like, oh yeah, I just took a break, now I'm back. It doesn't work like that, because you have to be consistent. You know what taking a break is? That's inconsistency. So if you take a break within that specific amount of time, you're trading, you do what you got to do, and then you take a break from trading, mind you, not seeing profitability, right? Because if you're profitable and then you take a break from trading and come back, that's all right. But if you're not seeing profitability and you're trying to learn how to trade and you're trying to get to that next level and you're taking breaks where you're not seeing consistency, because between that time where you took that break, that could have been the time where you seen that profitability, right? So you skipped time, you took out time out of your trading journey that you could have seen profitability in. If you're taking if you're taking a break to initially focus on your psychology, then I would understand that. But also, the more and more you trade, the better and the better your psychology should get better, right? Like, I know some days you're gonna have those hard, tough days. Okay, of course, everybody has those days, right? But you should always remember, just because, like, even if you lose your funded account, I know some people lose their funded account and say, okay, I'm gonna go take a break. Well, that break might not benefit you, because yeah, you're taking that time to cool down, but you have to get over that fear. And what taking a break is, it's that fear taking over because you don't want to lose no more. So what are you going to do to combat losing? Is quit or take a break. And taking a break to me is initially quitting, right? And it might not be quitting for the long term, but you're quitting between that period of time, and then you let the markets win. You let trading beat you in that game, in that psychology game. It took over, right? And you should never let it take over. You should always keep fighting that, you know, because you're gonna get there over time. It's all about the experience. I would also say, don't take too long trading demo. If you're a brand new trader, trade demo, do your thing, boom, boom, boom. But if you're a person, like I know somebody right now, he's trading demo, and he flipped his demo account from 100K to 250K, right? And it's like, okay, but why are you still trading demo? If you know the strategy, you understand the strategy, boom, boom, boom. And he's like, I don't want to lose all my money. So then why are you trading? Why are you trading demo then? Because you're gonna have to get to that point. It's the point of where the reason why I say demo is doesn't work when you understand the strategy. Once you already know a strategy and you already know how to execute it and you know what you have to do, now demo is irrelevant. The reason why I say this is because demo has nothing to do with your psychology, because you know that demo is just fake. It's overall fake. You can't pass an account, you can't make money from it, you can't do anything. Demo is just overall fake. So if there's no gain out of it, you're not going to care. So the trades that you take, you're going to let run, you're going to let go hit TP, you're going to let do whatever. You got to remember, psychology is so important and so big, is it, and it literally is something that will make or break a trader, right? So that's one thing I say about demo accounts is that, man, you just gotta you you can trade on demo, but don't spend too much time on it. Because if you spend too much time trading demo when you can build that experience trading live, that would be perfect, bro. Because all that time could be put towards trading. Maybe you want to start risking a little bit amount of money, or you want to start funded. Remember, like I said, you can go to Top Step, get a $20 account. Boom. Like, you know what I'm saying? It's small investments, and then you only have to pay the activation fee once you pass. That's 150 once you activate it, once you pass, once you activate it, right? So you're only paying $20 for an account. And then, well, it's like 50, but it's on sale now for 20. I don't know if it's on sale still, but you're paying a low amount to then possibly be able to pass. So then once you see your consistency, like you're able to consistently do that stuff, consistently trade on those funded accounts, that will be better for your psychology, because now you're in the live market experience, because you have something to gain from this. You don't have anything to gain from demo besides understanding a strategy. That demo will not build psychology at all. Trading live will, trading a funded account will. That's the thing. So yeah, I hope you guys enjoyed this video. I'm gonna cut this one right here. I'm hungry. I'm about to go, make some food, but I'm gonna cut this one right here. Hope you guys enjoyed the video. Like the video, subscribe if you're new, if you guys want to. I know I'm inconsistent on this YouTube channel. It's just that I'm pretty lazy when it comes to uploading. I don't like editing either. I'm gonna try to edit this video, and yeah, I'm gonna see y'all in the next one, man. Peace.